Looking to buy a home in 2022? Well, in this video, I'll be covering the top 3 things that you need to know before you buy a home in 2022. Hey guys, Gwen here with Intero Real Estate at Burlingame, where you can learn about our dynamic and fast-moving Bay Area real estate market. Let's just jump right into the video. First thing you need to think about are your down payment funds. Are they liquid in a bank account already, or are they in stocks where you still need to sell your stocks? And the reason why I point that out is because we're in a very volatile and dynamic market where things change every week and every day, where it could swing up and it could also swing down. And if it swings low enough, that could mean you might not be able to close on your property because the value of the stock has gone down so much. Now, did you know that there's a loan product out there where you don't actually have to sell the stocks to access the funds? It's called a securities-based line of credit. Basically, you're just borrowing against the value of your stock. And there's brokerages out there that will lend on the value of your stock from 50% all the way up to 70% of the value. Now, these types of loans are good for like bridge loans, where you're trying to buy a property and you need the funds temporarily to go from one property to another, or they're good for short-term and long-term loans. But the key thing is you just need some type of exit strategy, a repayment schedule or a strategy that allows you to get out of this loan, because it could be risky if you keep it for a long term and if you don't have a plan to pay it back. The second thing you have to think about is getting an updated pre-approval letter. We are in a rising interest rate environment where interest rate changes every single day. Now, the interest rate that you got quoted last month or the month before is completely different than what the interest rate's at today. So talk to your lender and get a pre-approval updated to make sure you know exactly what you can qualify for. And while you're at it, talk to your lender about relationship pricing. Now, relationship pricing means that the bank can give you better terms, better rates based on the relationship that you have. In simple terms, the bank wants you to put more money in the bank. Money doesn't necessarily mean just cash in a savings account. It could be stocks. For instance, if you had a previous employer, a 401k with them, and you need to transfer those 401k funds, you can do that with some banks out there that have a brokerage and just transfer those stocks, 401k stocks, into that brokerage to develop that relationship. As I mentioned, we are in a rising interest rate environment. The Feds, these guys are basically the folks who control the interest rate for our country, have already said that they're going to be raising interest rate 3 times this year. They did it once recently, and they have 2 more scheduled, one in summer and then another one in fall. And then they have 2 more scheduled in 2023, and then 2 more rate increases in 2024. So expect the interest rates to continuously go up in the coming years. At the end of the day, you need to talk to your lender and continue that dialogue with them to make sure that your qualification is on point and you really understand your monthly payments. Because as interest rates go up, your monthly payments will go up as well. Now, also talk to your lender about different loan products that's available out there. Now, they're probably talking about, you've already talked about 30-year fixed mortgage, which is the standard mortgage that everyone talks about. There's also this loan product called adjustable rate mortgage, the ARM. Talk to them about that loan product, because I think that might work out better for you in this rising interest rate environment. The third thing I want you to think about is affordability. Now, with higher rates basically equates to higher lending costs. So you're basically going to be paying more per month for the same loan today compared to, say, if you were to have gotten the loan 3 months ago. But with higher interest rates, the good thing is you're not going to see the crazy overbids of a few $100,000, or in some cases, like what you've seen in the news recently, $1 million over the asking price. So there's basically, in my opinion, going to be less buyers out there because of these higher rates. It's going to put a lot of buyers in the sidelines. So therefore, we're having this shift in the market where it's going to be a bit more balanced market. But this balanced market gives you opportunity to find the right home for you. And it also gives you more time to find that right home and inspect the property to make sure it's in the condition that you want it to be. Now, there's also less competition. There's no longer the bidding war of 10, 15, 20 offers out there. So there's higher lending costs, but there's the benefit also, you're not going to be in a bidding war where you're overpaying just to get the property how it was in previous months. If you're thinking about getting the market, keep this in mind. Buying a home is one of the biggest financial decisions that most people will ever make. So I share this with my clients that you should only buy when it's the right time for you. Doesn't matter where interest rates are at, doesn't matter what your friends are doing or what the media is saying. Forget all that. Is it the right time for you to buy a house? Do you have the right income? Do you have the sufficient down payment? Do you have the credit? If you answered yes to all of those questions and you're thinking about making a move, well, give me a call, shoot me a text, or send me an email, and I'll be happy to help you with that move.